Welcome guys and gals in this video. We will see if XRP coin is ready to rise or fly. Don't forget to subscribe and like, and watch until the end so you don't miss anything. And looking at the chart, a 3-contact falling trend line that the price has been in for a long time and has formed a strong resistance. This trend line has caused a downside reaction on each of its contacts and has suppressed the price. However, the price is now approaching this trend line again, and this is an important breakout opportunity. In such downtrends, the price gets more and more squeezed on each contact and usually gathers strength. Especially in previous contacts, we have seen the price reacting sharply to the downside. But after each contact, we can say that the power of sellers has decreased and buyers have become more involved. This suggests that in the continuation of the current move, as the price comes back to this trend line, the power of sellers may no longer be as effective as before. The most important point here is how the price will react when it reaches the trend line. If an upside breakout occurs with strong volume when it reaches this level, then we can clearly say that the downtrend has ended and the uptrend has begun. Because in technical analysis, the break of such multi-contact downtrends usually brings about sharp and strong bullish movements. This trend line, which is one of the levels that especially large investors and institutional buyers pay attention to, can contribute to the upward acceleration of the price by increasing the buying direction when the breakout occurs. Also, another point to note here is a possible retest process after the breakout. That is, after breaking the trend line, the price may come back to this area and test it as support. Such retests are usually a harbinger of more solid and reliable upside, and then XRP coin is ready to take flight. But we can't just look at the trend and see what's happening, so we need to look at other metrics as well. Stay tuned. Another notable structure on the chart is the 3-contact ascending trend line, which acts as a strong support and plays a critical role in determining the direction of the price. This trend line seems to have helped the price to react upwards and continue its uptrend at every contact. This means that every time the price falls, it reaches this trend line, takes support from it, and moves up again. This means that buyers are paying close attention to this level, and every time the price pulls back, it gathers strength and continues to move higher. This type of uptrend structure is often considered a sign of a strong bullish move. This is because it shows that the price is continually making higher lows and that buyers are stepping in earlier and earlier on each decline. This suggests that the market is strongly bullish and the uptrend may continue. Moreover, since this trend line has been tested 3 times, it works as a solid support point. If the price approaches this ascending trend line once again and receives a strong buying reaction from here, it will be an important confirmation that the uptrend will continue. In such trends, usually every pullback is considered as a new buying opportunity, and the price may move upwards again from this support. It is also a very positive sign that the price is making smaller declines and rebounding quickly each time it comes towards this trend line. This indicates that the buying power in the market is still high, and the trend could continue strongly. If this uptrend continues unbroken, the price is likely to make larger upward moves. Especially if the upward movement is supported by volume, it can further strengthen the trend and help the price reach much higher levels. And both trends are contracting and the price is contracting, it should explode in one direction. When we analyze price movements according to the Elliott wave theory, we can see that the market is moving in a major trend and is at an important stage. Looking at the current price structure, it is possible to say that the first 2 waves have been clearly completed and a strong rebound has started from the bottom of the second wave. In such patterns, the second wave is usually seen as a correction and is a critical process in which weak hands are eliminated and stronger buyers come into play. Now we are in a very important area for the beginning of the third wave. The third wave is known as the strongest wave in Elliott wave theory. This is usually the point at which the price makes its fastest and sharpest rise. If the market moves as expected, the third wave is expected to go at least up to the Fibonacci yellow line and green line level. This level is usually the point where the bulls are strongest and the price gains great momentum. Since the yellow and green lines identified earlier coincide exactly with these Fibonacci levels, these levels can be considered as targets. There could be a great opportunity here, especially considering that third waves tend to be more voluminous and aggressive compared to previous moves. This is because the third wave is one of the phases when the market really gains strength and investors make the most gains. If the price moves in accordance with this scenario and a strong wave of buying comes in, it can quickly reach the targeted levels. In addition, seeing a strong breakout from the bottom of the second wave can be considered as an important signal that the trend will continue upwards. Because the second wave is often a critical phase where investors hesitate, but big players step in and buy. The fact that the current uptrend is in its early stages and has not yet gained full momentum may create a potential opportunity for investors. The third wave comes out of nowhere, and no one knows about it, so you need to be careful. Looking at the current price action, there is an important bullish order block that we can consider as a strong support area in case the price corrects downwards. These types of structures represent areas where the price has previously been bullish with a strong buyer's reaction from a certain level. And it is usually expected that the market will react in a similar way when it comes to the same area again. For the time being, the price has the potential to make an upward move, but market dynamics may cause certain corrections and pullbacks. Such pullbacks are actually quite natural and necessary for the trend to continue in a healthy way and for new buyers to step in. At this point, if the price makes a move towards the bullish order block at the bottom, it is quite possible that buyers will step in and start a new bullish move. Such support zones are strong areas where traders are waiting to buy when the price hits certain levels. Large investors, that is the institutional players of the market and traders who buy in high volumes, are known to keep a close eye on these areas. This is because such levels are strategic areas where a large volume comes into play, buyers add strength to the market, and support the upward movement of the price. If the price reaches the support zone, which we have identified as a bullish order block, it is likely to receive a sharp reaction and start a new wave of upward impulses. This suggests that buyers are still in control of the market, and strong hands may be actively engaged at these levels. The increase in volume, especially when the price reaches this level, could signal strong buyer interest, which could trigger the start of a new uptrend. It's also important to note that such support zones are often difficult to break, and the price is likely to rebound from these areas. This is because these are not only levels where buyers have stepped in the past, but also psychologically, they are an important confidence point for investors. In other words, market participants are more inclined to buy when the price hits these levels, which may cause the price to limit its downward movement and make a strong bounce from the support zone. As a result, in case the price reaches the bullish order block at the bottom, it is highly likely that it will receive a strong reaction from here. This area represents both an important support level in terms of technical analysis and a critical point where buyers can step in and move the price up. If there is enough buyer interest from this region, it seems quite possible that the price will start a strong upward movement again and move towards the set targets. It has already received an upward reaction many times in the past. Why not get another reaction once again? There is a prominent bearish order block at the top, and this area has pressured the price with a downward movement more than once in the past. Bearish order blocks are considered a strong area of resistance by the market, as there has been major selling pressure from this level before, and the price has fallen. At the moment, this is one of the first major resistance points that the price may face. However, this alone doesn't mean that the price won't be able to break through this area. Even though the bearish order block is strong, it is possible for the price to break through this zone, especially when there is a bullish move on volume. It's true that the price has reversed from this zone in the past, but every market condition is different. If buyers step in strongly, it may be possible to break this resistance zone and push the price to new highs. Another important factor is that this bear order block is the first target if the price breaks out. So if the price approaches it, there is likely to be a big struggle in this area. However, it can often be difficult to break this level the first time. This is because traders will remember the past selling pressure at this level and this resistance structure. Therefore, if the price hits this area, there could be a big pullback at first. However, a break of this resistance zone will signal the start of a strong bull move. The fact that the price fails to break through this level the first time should not be considered as a negative situation. Such pullbacks and reversals in the market can often herald a more solid uptrend. That is, when the price reacts from the bearish order block and pulls back towards this level again, it can create a better opportunity for buyers because it weakens the seller's pressure the first time it breaks there, and then the buyers prevail. Yes, friends, we have come to the end of another video. Don't forget to like and subscribe. Don't forget that more videos will come as you show support.